thanks for joining me on my market report. My name is Mike, and the market report is on mortgage rates. Uh, we kind of get into what's driving mortgage rates on a daily basis, whether it's something on the economic calendar or headline news or some geopolitical or something out of the air like sentiment. So sometimes good news can be bad news, and that sentiment carries over in the market. So we kind of wonder what the heck is going on. This is not logical. Well, sometimes illogical things do happen in the markets, and we're here to kind of report that to you, so that way you have some background information. So these videos are great for those who like to watch where mortgage rates are at, who are in the process of refinancing or purchasing, so you can kind of keep an eye on where the rate trend is moving. A little bit about myself is I am a loan officer. I do work with the national lender. We'd love to be able to help you guys out, earn your business. So please reach out if you guys are looking to refinance or purchase, or if you guys just want to ask questions. If you guys got something to say, we'd love to be able to hear from you guys. We'd love to be able to communicate. If you got questions about programs that are available out there or rates, where the trend is, the long term currently is basically going upwards, and so the best way to kind of picture what we're kind of experiencing is imagine a little boy playing with a yo-yo and walking up a ramp. We're going to have these little ebbs and flows where it's going up and down, but long term it's going upwards, and that's kind of what we're going to be seeing here throughout, especially with talk going into tapering from the Fed, um, trying to get the economy back into uh, normal mode for the most part. So those are things we're going to kind of see here going forward. But today, let's start off with the economic data. Today, we don't have a whole lot. We do get every Wednesday the MBA released their mortgage application activity report, and we can see here that last week that both our purchase and refinance both dipped off. And refinance, of course, are more impacted by the rates, and we did see a spike in the rates, and so those dropped off a bit right there as well. However, one thing that's not on the calendar here is the Fed Beige Book was released earlier today, and didn't have much of an impact on the market because stocks are kind of about the same. Stocks are basically a mixed territory where the loan index uh, is the NASDAQ, and of course they're getting pinched by things like the 10-year Treasury with the cost of rising here. As you can see with the 10-year Treasury, we're just under 1.64. We did touch off at 1.6. So I believe it was even up at 1.67 at one point, but it looks like here, according to this, at 1.65 was the high of today and pulled back a little bit. So we will hopefully see that continue to pull back a little bit, as that does put a little bit more pressure on mortgage-backed securities. But to get back to that Fed Beige Book that investors were looking for, it did make comments like the economy is growing at a modest to moderate level. One of the things that's impacting the markets across the market is a low supply of workers, and they do find around the U.S. Significantly elevated prices. So basically, inflation and this labor shortage and supply chain is what's dragging the market down, and we haven't got past that yet. And so until we can, we're going through. And one of the biggest, we're starting to hear more and more talk about inflation, and a lot of people are kind of coming back and saying, inflation not necessarily is transitory. They feel that it's going to be here to stay, and this is especially with energy prices continuing to rise. Eventually, that's going to get absorbed into the overall pricing of things as people's cost of deliveries, everything else goes up. Those will be built into overall costs and get passed on to the consumer, and so we do have to kind of watch that as well, even though we get numbers without excluding food and energy. So again, then we also got a few Fed speakers speaking today. So far we haven't really had anything off the message other than they keep, one of them I think did state that they like to see the taper begin next month. I don't know if they'll begin right off the bat. Maybe they'll start, but they do have a meeting coming up in about 2 weeks, and perhaps they might begin it the following month. Give a little headway for it. But again, we'll have to kind of wait and see. Some of the things to look at in the future is, now winter's coming up, people are going to be stuck indoors. You may see another spike in COVID numbers again. So those are things that could potentially hold things back a little bit on these as well. So got a lot to chew over, but in any case, we'll have to kind of see what happens, I guess, in the future. But those are just some of the things that you can kind of think in the outlook in terms of what's going to happen here. So let's take a look here at mortgage rates here. I'm going to make this a little bit bigger for you to see, a little bit better here. Yesterday we basically broke uneven. I think we would close up 3 points or something like that. So unchanged again today. Pretty much the same thing. We're only up 3 points, and it's not enough to make any change of pricing. So mortgage rates remain unchanged from what we've seen the last 2 days, essentially. So kind of the sideways pattern at the moment. Here's what it looks like just today. The pretty much as you can see, for the most part, it's been kind of flat across with a few spikes here and there. But for the most part, it's been kind of straight across the board. Not really much of a change anywhere. And then as I talked about, sorry about that, I like my 1 month, so it's a little bit easier to digest the information. And then we got the 10-year Treasury, as we mentioned, trying to break above this next level here. It was up at as much as 1.65, and we're just under 1.64 right now. Now, for national averages pricing, 15 years well, 30-year will go here at 3.19, and then the 15-year was at 2.57. So we saw some price changes in that as well. So again, that's kind of averages. They do have built-in pricing into it, like points that are built into that. That's why you're not seeing an 8 points. Usually that's why we usually go like 3.125, 3.25, usually by 1/8 of increments there. But because we put points and stuff like that, you get more APR type of format. This is more what you're kind of seeing on an average congregate there. So with that in mind, I hope you guys liked the video. Hope this was helpful. If you guys like these videos, I greatly appreciate if you could smash that like button, maybe follow us. We're here to help you guys out. In the meantime, if you guys got questions about anything, please reach out. We're here to help. We love to be able to talk with you guys. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye-bye.